Well, hello everyone, and welcome to Taking Stock After the Bell, episode 69. Joined as always by James Hughes, not looking very tanned after his 2-week holiday in
This is as tanned
Cyprus.
as I get, thank you.
And also joined by Carly Moorhouse. Carly is your returning guest. Been on this
Yeah.
before? Yeah,
Yes, it's
in the
been a
meeting
while,
room with
but
the iPhone on the desk. Yeah, that's it.
yes.
Carly's our Asia emerging markets and US equity analyst. Any others? I missed any? No.
Nope, that's it.
And is here to talk all things Asia and emerging markets. Carly visited the region on a trip in
April?
April. Good.
Mhm.
So has got some on the ground insights for us. And it's fair to say it's a region that has sprung back to life recently. We've got a few charts to get things going. First chart here is just of the sort of recent performance. We've got the emerging markets in grey in the last 18 months or so, about 50%, which is ahead of all the other indices, Europe, UK, Japan, and the US, actually the laggard since the end of 2024. I'm quite pleased with this chart. So this is a really long-term chart going back to 87 of how emerging markets performed relative to the rest of the world. And you can see in the early 90s, emerging markets hugely outperformed the rest of the world, then massively underperformed. Then the noughties, which as Husey and I have often talked, was our sort of our early investing careers. It was all about the bricks in those days.
Totally.
Commodity super cycle.
Commodity super cycle, BHP, Rio Tinto, emerging markets, all you needed. And it massively outperformed everything else. And in the last 15 years from 2010, 11 through to 2025, emerging markets massively underperformed the rest of the world, led by the US, notably the kind of US tech sector. But at the the right hand side of that chart, we've got emerging markets just beginning to outperform the rest of the world again. And if you were trying to think what would happen to this chart next, you might think it was going to carry on going up, wouldn't you? I don't know.
Well, we'll see.
We'll see. We'll see. Well, you're not here for that. Predicting the future stuff. But in terms of what is in EM, Carly, do you want to sort of talk us through this? I've got sort of sector and country breakdown here in pie chart form.
Yeah, so I'm assuming this is the MSCI emerging markets.
MSCI EM, yes, is out of FactSet
Index?
data. Yeah.
Yeah, so you can see obviously that tech is now 45% of that index, and that's increased quite meaningfully in the last year or so. And that goes hand in hand with the changes in the country composition as well. So you've got, Taiwan and Korea, bigger parts of the index than China today, which is something that would have seemed very unlikely a couple of years ago. China at one point was close to 40% of the index. 18 months, 2 years ago, India was double what it is today.
Yeah.
That's come right back after some pretty weak
Performance.
over the last 2 years, really down about 20%. So you've really seen that shift meaningfully, and a lot of that has come from very strong performance from the tech names, particularly in Taiwan and Korea, which you can see there.
Yeah, brings me on to my next slide. Slide 5, we've just got the top 10 holdings here of MSCI EM per FactSet. So Taiwan Semiconductor makes up 15% of the index. So, we talk a lot about US equity market concentration with the likes of NVIDIA, Apple, Microsoft, and the tech sector being 40%. Quite similar in EM, isn't it?
If not more so.
If not more, more so.
Is this to today?
Yes, this was yesterday's FactSet data. Yeah.
Yeah, so I was looking to the end of June, and obviously we've seen a bit of a correction since then. But to the end of June, those three stocks, TSMC, Samsung, Hynix, were just over 30% of the index. So
that's a lot.
more concentrated than the US.
Yeah. And then, final chart for now. We've got MSCI Korea. This only goes back to the start of the year. This is only year to date. And again, this is to last night. So this includes the setback we've had. But the Korean stock market is up 82% year to date, having been up 150. MSCI Taiwan, also the other strong performer, up 57%. And then really the laggards are Brazil, up 7%, India down 4%, and China down 10%. So, and you can see those lines have pretty much flatlined. So it's been volatile, but yes, Korea and Taiwan really the standouts, and those three stocks that you mentioned really have been the story. So talk us through firstly, why don't you touch on those two markets in terms of where that comes from and why, and then perhaps we can come back to the stuff and we can come on to this sort of a little bit later.
Yeah, so TSMC, it's a stock that's held in a lot of portfolios.
Mm.
Seeing it increasingly in US portfolios as well. Leading advanced foundry. It is a global leader when it comes to semiconductors. And that's performed well for quite some time.
Yeah.
That index composition, that index weighting has been steadily increasing over the past few years. So it makes it quite difficult for a lot of managers to be overweight that.
Yeah.
Obviously, if you're an investment trust, it's slightly easier. But for a lot of funds, it's very difficult to be. And it does mean that if you want to get even close to that, or as a trust, if you want to be
Mm.
overweight that, a significant part of your portfolio is suddenly in one stock.
Mm.
So that's continued to do very well. It seems as if kind of all roads lead back to TSMC, really.
They are the ultimate kind of shovel maker, aren't they, in the gold rush? Is that a fair
Yes,
assessment?
and the earnings are a lot more durable, for example, compared to something like Samsung and SK Hynix. Historically, the memory names have very cyclical earnings,
Hmm.
and that is also why you do see such a difference between the valuations of these companies. So TSMC today is on around 19 times forward earnings PE ratio,
Okay.
whereas Samsung and Hynix are more like 6-7 times. A
Yeah.
lot of that also comes from the fact that their earnings projections extremely high.
Extremely high, yeah.
But also, they are, as I said, historically very cyclical parts of the market, memory versus chips. But you have seen a lot of demand, particularly for memory coming through, and the bottlenecks are a lot of it is coming from Asia, and that's where you're seeing these companies performing extremely well.
And what's the sort of history then of, Taiwan, Korea becoming world leaders in the effectively now the AI supply chain? How has that kind of come about? Is that a sort of quirk of history, or has that been quite deliberate policy over a number of years?
I think part of it is policy and a focus on these types of areas. I don't think you get nearly as much as you do in China, where you
Mm.
obviously get a lot more tone from the top. But it's just having the expertise in these areas and a lot of focus on that. Um, yeah, I don't think it's as much of a policy decision as I would say it's something
Mm.
in China, for example.
It's quite surprising that, going back to the chart before on China's performance, that it's negative this year, because China has a fair amount of tech in the index as well, doesn't it? What's
Yes,
happened there to
that
drive that?
is that the MSCI China.
It is, yes.
Yes, so that is also a quirk of that index. So the MSCI China is both onshore and offshore. Um, Whereas if you think about something like the CSI 300, which is the 300 largest companies onshore in China, that's up actually quite significantly this
Okay.
year. Or if you compare that to the Star 50, which is China's equivalent to the Nasdaq, essentially, I think that's up about 60% this year.
Right. Okay.
So that is where you are
Sure.
seeing the divergence between kind of some of the more old economy stuff versus new economy. This new economy stuff, which is more around, AI and tech, not the internet platforms. They are seen as a bit more old economy now, which
Okay.
is
All
quite
mad.
funny.
Yeah.
But the more AI, robotics, all of that sort of stuff, which you would see on the Star Index, Star 50, that's performing very well and is pretty expensive.
And when you're talking to the managers of the EM and Asian funds, obviously sitting here in London, we've spent a lot of time, on this podcast as well, talking about, AI, whether it's a bubble, whether there's too much excitement on it. Are the managers kind of running EM money as concerned about that, or do they have a different view on how things might end up?
Yeah, I'd say it really depends on who you're talking to and
Right,
what
okay.
their style is. Obviously, the value managers are slightly more concerned about these names and frankly how much they've moved in the last year or so is pretty extraordinary. So definitely seeing a divergence between if you're talking to a growth manager versus a value
Yeah.
manager. But even still, I think people are positive because the valuations don't look overextended, but just the magnitude of these moves does make people slightly nervous. And we were talking about it before with regards to how much just the Kospi's moved and based off of these two stocks, and you talking about the fact that just in May they launched or the regulator allowed for single stock leveraged ETFs
Classic.
in Korea on SK Hynix and Samsung. since that, it's really exacerbated the volatility in those markets as well. Um,
So
so
probably worth explaining to listeners that aren't aware. You've got some instruments now that will give you sort of 3 times
yeah,
leverage, haven't you, on a
one
Samsung
single, yeah,
or an SK Hynix, and that's
exactly.
what's driven the flows, and ultimately the index provider has to, I
ETF
guess,
provider.
yeah, the ETF provider has to manage that risk. So some of that will be natural buying as well. Some
Yeah,
of it will
the
be
daily rebalancing exacerbates the
exactly.
volatility of it. Yeah.
Mad. And then behind those kind of big stocks in the headline indices, is there a sort of domestic demand story as well, and a sort of growth story for managers to invest in, either down the cap scale or in other areas, as opposed to just the AI supply chain memory /
Do you mean
foundry?
in Taiwan and Korea
Yeah,
or
in
outside
Taiwan
of
and
those
Korea. Sorry,
markets?
yeah.
There are a lot of smaller companies within the supply chain, which actually have performed really well as well.
Mm,
Anything kind of geared into the AI theme has, but it's not moving the index the same way that those stocks are because, said at one point at the end of June, they were both up near 7-8% each.
yeah,
A lot of these other companies within the AI supply chain in Korea and Taiwan are 1% or less than 1%.
Yeah,
So
sure.
even though they're up 100, 150, 200%,
it's
it's not
not
getting the
moving the
same
dial.
airtime and it's not moving the
Mm.
dial.
Hmm.
Said.
And then just on those two countries specifically, and perhaps touching on China as well, there is a sort of demographic problem, isn't there? Do you want to sort of talk us through that? And I thought that was really interesting when you explained that to us.
Yeah. So it's not a secret
No,
that fertility rates in a lot of these countries are a lot lower than they have been. I think in China today it's just below 1. I think Korea has the lowest
Korea has the
fertility
lowest.
rate
Yeah,
of all major economies. I think it's 0.8.
Is it?
So it's much lower than the replacement rate.
yeah.
Um, we were talking about this before. I was in Taiwan recently, and I had noticed that there are a lot of prams about, but what's in a pram is not a baby; it's actually a dog. So I did have a conversation with somebody who ran a pet shop, and they had a lot of prams in the front window. And I did ask about this.
Mm.
This, it's quite unusual here. Um, and she said that people aren't really interested in having children. That's across
No.
all of North Asia, really. So Taiwan, Korea, and China. People would rather kind of focus on themselves. And she made the comment that the environment isn't particularly great. So they're just not really that interested in having kids. And I think in China it's a slightly different dynamic as well, in that they've
Yeah.
had the one child policy that's
Yeah.
been lifted, but also in a lot of these countries, it's expensive to have children.
Totally.
There's no
So
NHS. There's no child benefit as such to support.
exactly, and I know in places like China they have started to introduce things like this, but again, when you've been set in a certain way for such a long time, it's really hard to change that mindset.
And then I
That's
guess
what they're
if you're
struggling with.
a couple of Hughes I's generation, you're actually looking after two sets of parents as well, aren't you?
Yes.
And therefore you sort of feel, well, I've got my hands full between the two of us. We've got 4 parents to look after into their dotage. So how can we look after kids as well? So I guess there's a sort of strong social aspect to that, isn't it? But that's going to be really interesting to see how that kind of plays out in terms of the economy, and maybe just sort of moving on to China. That seems to be more the hub of the kind of robotics stuff, right?
Exactly. I think that is why there is such a focus on moving towards automation and robotics. It's
Mm,
to kind of fill this gap that's being left by less replacement of labor. Um, so I think that's why there's such a focus on it today, and to make sure this is an industry that's they're leading in.
yeah. And did you see many robots in China? Were they relatively widespread, or was it quite niche?
You are seeing them around China. Again, they're not everywhere, but
Mm,
you do notice it so much more than you would see here, for
Yeah.
example. Um, at I think it's much more, the kind of more basic things at this point. So, you'll see a more basic robot, cleaning a shopping mall or a hotel,
hmm
or, in a restaurant, delivering food from the kitchen to the
Mm.
table. That's supplemented by human waiters and waitresses.
Yeah.
It's not all relied on by the robots, but there's an idea to move away from having or paying people to do these very basic things that you can just get a robot to do, and letting them do the more complex things. So you are definitely seeing a bit more of
Mm.
that. Again, I think if you were, I was there for 5 days,
Mm.
but I think,
In China for 5 days.
yes, I was
Yeah.
in China for 5 days. But you see a lot of stuff online where people are, like the police force in Shenzhen, for example, are apparently trialing them using humanoid robots. So you're
Nice.
hearing of these use cases. I personally saw more on the basic side of things, and we did visit a robotics company as well, just to talk about, where they're seeing the demand.
Mhm.
But yeah, it's much more on the basic side, which already is more so than you're seeing
Mm.
here in a lot of Western countries.
Amazing. And what are the other sort of? I mean, China's been through a sort of soft economic patch for the last few years. Property markets basically been in downturn for what,
Mhm.
5 years probably.
Yep, since about
Continues to go
2020, the
down.
3 red lines policy.
Yeah. Is that any sign that's coming to an end and any sort of sign of an upturn?
So the highest tier, so tier one cities, that has definitely stabilized.
Mhm.
And from what I'm hearing from managers, when they are releasing particularly quite high end property, that does get snapped up. But
Right.
anything below that, where, let's face it, the majority of the population still resides, that's quite challenging
Mm.
still.
Mm.
I think there are signs of it stabilizing, but at the end of the day, that is the idea, isn't it, for it to stabilize, as opposed
Mm.
to, they don't, well, the Chinese government don't want to see it tick up, because they do want to move away from property being such a
Sure.
big part of
Okay.
GDP growth.
And away from tech, where are managers getting excited in terms of, I guess, where they see potential value or kind of change or cyclicality coming, or again regions? Because we went through a phase of, with EM managers sort of being less exposed to Asia, more to South America,
Mm.
and that seems to have swung back again because of
Yeah.
what's happened in tech. Sort of have any managers sort of talked about any crystal ball gazing or anything that they think looks interesting?
Yeah, so Brazil has elections coming up, so I think
Mm.
people are kind of waiting to see what happens there. I haven't seen much reallocation towards LATAM really. I'd say China's the area that most people are quite positive on.
Oh,
It's,
there, okay.
we've spoken about it already, but it has lagged quite significantly
Yeah, really
this
has.
year. So people see a lot of value in that market. The consumer side of things hasn't really picked up. We've spoken about this a lot, but Chinese households are sitting on a lot of excess cash.
Mm.
It's not that people don't have the money to spend, it's that they haven't wanted to, just because of the weakness of the economy, and just not having the confidence to go out and
And that's
spend
been
that
since
money.
COVID, really, hasn't it?
Exactly.
It's
Well,
been a long time
It's
now.
only longer
Yeah.
than that, though, isn't it? 'Cause they haven't got an NHS and they don't really have a welfare system. So the
Yeah.
typical Chinese households always saved
It's a
40,
cultural thing,
50% of
yes.
their income anyway, because
Yes.
they need the rainy day funds.
Exactly.
But you know,
What, you mean they don't spend it on bikes and golf?
well, more fool them, isn't it? That's what they need to be doing. But I guess and it's not dissimilar to the UK, because UK household savings, and I've talked a lot about, how UK households are in a relatively good position from a buffer perspective.
Mm.
You just need the savings rate to go from 50 to 45 or to 40 to come down a little bit, start deploying some of that money.
Yeah.
And all of a sudden, consumer discretionary stocks, travel, leisure,
Yeah.
all starts to pick up and it looks a lot better.
Exactly. I think the estimate is that since the beginning of COVID, excess savings have reached about 7 trillion renminbi, which is a huge amount of money. So if even just a little bit of that came
Yeah.
back into the economy, or even if people invest it in the stock market.
Yeah.
Mm.
Gets deployed elsewhere.
Exactly.
What's going on with luxury stocks? Obviously, did very well because of the exposure to EM and China in particular, and there was always it was always explained that Chinese people in China like to own Western brands and saw it as I guess like a class thing almost. Is that still the case, or are they moving towards their own brands a bit more? Or is it not? Has sort of I guess behavior changed a bit there.
I think in some segments of the market it has, and in others it hasn't. So where there is an equal or higher quality um, replacement, which is a
Okay.
local brand, you could see people moving that way. So, for example, there's one company that's quite well known called Laopu Gold.
Mm.
So it's a jewelry company. It was established in 2009, so not a particularly long
Yeah.
heritage. It's also not cheap. I did go into to have a look at some of their stuff and asked to see their bestseller. And they told me their bestseller is that showed me this necklace and it retails for about £2,000.
Oh wow.
Okay.
Um,
So you bought two.
Tempted, but no. Yeah, this is something that a lot of the analysts I spoke to said, we've bought this type of thing, and as I said, they've got a lot of excess cash, and if it's more about this, emotional value of something, if they think that it really represents emotional value, then they will actually spend money on it. But what this brand has been really successful in doing relative to Western peers, which obviously have a lot longer heritage, is that they will incorporate Chinese motifs and designs into their jewelry, which the Western brands either don't do or don't do very well. So this resonates a lot more with the Chinese population, and that's why it's been so popular. So there is a brand that they really like and can see themselves buying more of relative to a lot of the Western brands. But conversely, there's not really the equivalent kind of Louis Vuitton or Chanel, really. So that is still incredibly popular, if you know what I mean.
But so we think there's probably some potential in China if the property market stabilizes, households in good shape, bit of confidence returns, and we could see a sort of cyclical upswing there. Do we think is that fair representation?
That is what I'm hearing from a lot of portfolio managers, particularly because this part of the market has significantly lagged.
And the Chinese equity market is quite cheap anyway, 8-10 times or whatever it is.
Exactly. So if a little bit of this spending money goes into the market, you could see a significant re-rating in a lot of these types of companies.
And then up until a year or so ago, the Indian element of emerging markets, which was about a quarter of EM at one point, I think, or certainly 20%. 20%. That has lagged quite significantly. But India was historically on a very high valuation multiple, wasn't it? It was on about 24, 25 times the index itself. And that's come down quite meaningfully, though. Is there any potential lower managers looking at that, or got any sort of interesting views from
You're starting to see people sniffing around. It's down about the Indian stock market. So MSCI India, for example, is down about 20% in the last 2 years.
And have PEs reflected that, or have earnings fallen? No, so the PE is still high.
The PE is still, relative to other places in EM. So the PE is about 19 times, 20 times.
So it's come down a bit, but it's not cheap.
It's not cheap, especially when you're thinking about somewhere like China, where PE of about 15, and you're looking at mid-teens earnings growth. So it definitely doesn't look cheap relative to other parts of the market. But that doesn't mean managers can't find ideas within India. There are pockets of the market which are looking a lot more attractive. I'd say financials is definitely a part of the market that a lot of managers are quite positive on right now.
But the fundamental story in India remains relatively positive from an economy perspective. And again, you don't have the population constraint or pressure because birth rate's a lot higher. The younger population.
Yeah. They've the long-term structural growth drivers for India are definitely still intact. As you mentioned, very large, biggest population in the world. But also very young population. The average age is about 29 years old.
Okay.
But actually, more recently, that has created some problems. I'm not sure if you've seen in the news, but they're having huge protests from a lot of the younger population. It was sparked by there was a test basically, and then there were allegations that the test had been. It's for people to, if you want to go into any sort of medical profession, you do this test, and a lot of people sat it, and then there were allegations that the test had been leaked. So then they made everyone resit it. It's caused these widespread protests, and it's led to the education minister resigning. It is one of those things, isn't it, where all of this stuff happening on the other side of the world, and
even in this day and age,
it doesn't get any other coverage. So yes, that very large and young population, because there's actually quite a bit of youth unemployment at the moment in India. Actually, that's creating a bit of an issue.
Social tension.
Exactly. But longer term, obviously, there are a lot of benefits of having a large and young population. Obviously, large future labor pool, tax base, steady increase in demand for goods and services over time. So those things are all very positive for India. But over the last 2 years, I'd say it really is that valuation element. It started in 2024 when really around the same time that the Chinese government introduced that stimulus package, which was the largest since GFC. That was September 2024. And everyone just started to rotate out of expensive India into cheap China.
Yeah.
And then obviously last year, it seems like a very long time ago, but it was only last year, we had Liberation Day. India was actually, quite surprisingly, one of the countries that was hit hardest with the tariffs. And even when the US kind of pulled back some of the tariffs on China, they ratcheted them up on India because India continued to buy oil from Russia. And so they doubled the tariffs to 50% on Indian exports, which was quite surprising because at the beginning of the year, we saw actually some very good interactions between Trump and Modi. So people didn't think India would be as affected. However, that continued all throughout last year, and then more recently with everything that's going on in the Middle East.
Because they're quite a big oil importer, aren't they? They don't have any energy of their own, so they're very, very sensitive to oil for power.
Yeah.
And then the final piece of the India jigsaw, of course, is the stock market makeup and the economy makeup. So I've got two mates from university who both work for financial services businesses in London. Both spend their time going back and forth to India to their operations, their back office, call centers, and obviously in a world of AI.
Exactly.
We can just talk to the computer and the computer can talk back to us quite sensibly now. So, and then there's sort of that software adjacent kind of stocks. Yep. So the market structure probably is being hurt by the sell-off in.
They have about, I think, 7.5% in tech in the Indian stock market.
Right.
And that's predominantly the IT services companies.
Software-y things.
Infosys, Tata Consultancy, those types of names. And they're just seen as AI losers, basically. Yeah. And then, as you said, you've got the other element of the kind of call center bit. So, there's a lot of concerns around that sort of thing. But year to date, it really is AI have and AI have not.
Yeah, and it's a sort of microcosm, I guess. Emerging markets, I guess, would be a microcosm or identical to what's been happening in the US, really. We got semiconductors and the chip providers winning, and you've got the software / AI losers on the other side of the trade. You just so happen to have it sort of geographically slightly differently in emerging markets. But it does sound as though it is a very diverse kind of market. And then I know it must be interesting for you talking to a lot of different managers with a lot of different opinions. Presumably a lot of these managers have to travel a lot and visit all these places and get their boots on the ground. Is that sort of fair?
Yeah, exactly. Obviously, we talk about a handful of them because they're the biggest markets, your China, India, Taiwan, Korea. But within the MSCI EM index, there's about 23 countries.
Right.
There's a huge opportunity set.
A lot of Eastern Europe would be emerging markets as well, wouldn't it?
Yeah. Yeah. So we see a little bit more of that in portfolios. Again, 23 countries, but, they're not all particularly deep or liquid. So you can have small exposures to a lot of these places as well. Having that diversification of 23 different economies, all doing very different things is also a big benefit to them.
And then is there any other, when we really touched on Latin America, but obviously your travels didn't take you to Latin America, did it?
Sadly not. Maybe next time.
But that sort of seems interesting. You mentioned government change in Brazil, but obviously Mexico, again, is also part of EM, isn't it? And there's presumably lots going on there on the southern border of the US.
Yeah, they've actually managed everything with the US incredibly well, and the market has performed a lot better than people expected it to. I'd say that's across the board, though, in emerging markets. Right. I think when Trump came back into office, there was a lot of concern about what he was going to do, and it's not that he hasn't done things. It's just that a lot of the things he's done hasn't actually had a massive impact on a lot of these economies. They seem to have brushed it off quite well, and Mexico is definitely one of them.
I can't remember their president's name, but she seems to have come out of it. So she's come out of it quite well, hasn't she?
Yes, exactly.
Not an easy task by any stretch.
No.
Hughes, anything you wanted to ask on Asia emerging markets?
I guess on China, obviously they've been very successful in electric vehicles. Does that continue to drive the economy? Or I know that there's huge numbers of electric vehicle companies, only some of them have been successful, but how much are they leaning on that? So are there lots of them listed?
I don't think they're leaning on that specifically. There are quite a few which are pretty well known, like your BYD, NIO, XPeng, Li Auto, but there are hundreds of them.
Oh, really?
I really when I was there last year, I expected to kind of touch down and get into a BYD or a NEO, but the ones I was seeing were names I'd never even heard of. So there are
That's what I'd read was it's just there's so many different brands,
so many, and each province has their own favored electric vehicle manufacturer. So there really are so many.
Yeah.
Obviously BYD is the one that everyone really talks about, and that's the one that's managed to go more international and much more global. But again, this is an industry that the Chinese government have been pushing for a very long time, and the reason they've been so successful isn't just because they can source a lot of the supply chain domestically. A lot of the parts for the batteries, for example, you can source that domestically, and that's the most expensive part of the EV, and that's why they can price these things so competitively relative to other countries. But it's also the fact that the Chinese government, as I said, have been pushing this for such a long time. They've been giving them tax breaks and subsidies, so it really does show what can happen to an industry in China that has the backing of the government. It's a very powerful force.
How many people are Volkswagen getting rid of? 100,000?
It's huge.
Yeah. And they're cheaper, but they're not lower quality at all.
No.
Again, I would say that I'm a car expert. But having seen these up close, sat in a few of them, spoken to a lot of people about them, the quality is meant to be fantastic. And they're doing a lot of really interesting things as well. We've spoken before about Xiaomi, which is the car there. And they used to be a smartphone manufacturer. I mean, they still are. So similar to Apple, but they broke into the EV market within 3 years. Did something that Apple couldn't do. How long did they try it for? About 10 years?
Yeah.
And spent billions on it.
Yeah.
Whereas this company moved from being a smartphone company into the auto market, launched this car, the SU7, and very impressive.
It's amazing.
Goes from 0 to 100 in less than
they're very
2
innovative,
seconds or something like that.
But the electric vehicle though, is a lot simpler from an engineering perspective, though, isn't it, to a combustion engine, because you need few moving parts. You don't need a gearbox. You don't need drivetrains in the same way. It's an engine. It's a battery and a motor. And then obviously you've got the software overlay to it. I was listening to a podcast today actually about Apple and China, and it was quite interesting. They got the new guy taking over, and they were sort of saying that it's likely that China will start using Chinese memory companies in their new iPhones, particularly for the iPhones that are sold directly in China.
Yeah.
And they're also talking about Siri, which apparently Siri, the new AI, is going to be amazing. We've heard that before, but the Chinese iPhones will be using Alibaba's models in them, because at the moment Google are or Gemini providing the models in the rest of the world.
There's some big updates coming September, October.
So I thought it was quite interesting how Apple's strategy has been manufacture all the iPhones in China, but now also Chinese components going into the iPhone. I thought it was quite an interesting step for them to take directly.
Yeah, I think they've been speaking a lot about CXMT, which is the
stock that was IPO'd 2 weeks ago, a week ago, for something like that. It's up about 800% in a week.
Yeah.
Didn't buy any, funnily enough.
But you're seeing a lot of these types of things coming out of China. And I don't think they're not going to be taking a huge amount of market share from US companies, for example, because in the name of national security and things like that, they'll very quickly go onto some sort of list, I'm sure. But for their home market,
and it's a big enough market.
It's a big enough market. It makes
there's
complete
a lot of money
sense
to be made. Yeah,
and that is one of the key themes I've spoken about before, is this tech sovereignty and not having to rely on getting so much of your tech supply chain from other countries. And that's
it's actually very clever
really
the way Apple's positioned themselves to be able to continue operating and to sell locally is by incorporating Chinese software.
And they've managed to keep US politicians on side as well. They managed to sort of walk the tightrope of that. So it'll be interesting to see how it goes. Anything else that from your tours and trips that sort of springs to mind that you think our viewers and listeners might be interested in?
I would just say that it was very evident to me being there that this shift away from essentially being the world's cheap factory, moving up the value chain, this is actually happening. This policy pivot is starting to bear fruit. And we're, we just spoke about it. We're seeing this coming through in these companies which are IPOing, and We saw it first with DeepSeek. People thought nothing was going on in China, but behind closed doors, a lot of this, innovation is still happening.
Well, we had it last week, wasn't it, with the Kimi
Moonshot.
3 moonshot, the Kimi 3 model, which has leapfrogged all of the other models to be the cleverest in the world, which sent a bit of a wobble through some of the stocks in the US on the day it was announced. So they're clearly not very far behind in terms of their ability to roll out the high end models.
No, it seems like a bit of the usual China story, and that maybe they aren't as good as their US counterparts, but they're not far behind, and they're a lot cheaper.
Yeah.
So it will spark this kind of much more widespread adoption much more quickly.
Bit of Jevons paradox there, reference for our listeners and viewers. One for the AI. And just final chart, really. I've got a chart here which we didn't touch on at the beginning of valuations on emerging markets compared to the rest of the world. So chart 7 here, we've got the blue line, which is MSCI emerging markets after the recent sell-off on 10.5 times forward earnings compared to Europe, including the UK, on 14.9. The rest, the world as a whole, on 17.3 times in the US, as the premium 20.6, albeit that's come down quite a bit. The P has come down because the earnings have gone up, though, so we have to note that. So profits growth in emerging markets is very strong because of AI, memory, semiconductors, etc., etc. And again, memory is very cyclical. So would we bet our bottom dollar that those earnings that growth is sustainable? Well, the earnings themselves are probably sustainable. With the growth rates, probably not where they are. So, and you'll see a lot of cyclicality there. So, whilst emerging markets has been the best performer for 6, 12, 18 months, whatever it's been, it's despite the last week or so, still remains the cheapest kind of major market in the world, even cheaper than the UK. So, and an interesting place to go hunting, I guess, if you're an active manager and you're willing to get out there and, if you want to go and see a coal miner or a gold miner in South America, or commodities business or a consumer business in North Asia or wherever it might be, you've got quite a deep pond really of opportunities.
Exactly. And it's more important now than ever, I think, to be active, given the concentration that we were speaking about.
Yeah. Well, luckily our emerging market funds have had quite a good year, haven't they? Couple of years. So that continues. Anything else, Yuzi, you wanted to
Nothing
touch
from me.
on? No, Carly? No, thank you very much for your time today. Thank you very much to everyone for watching and listening. Any questions, let me know. Jonathan.Raymond@quiltercheviot.com, and we will see you next time. Thanks very much.
Thank you.